Hello traders and welcome back to the Forex Geek where we dive deep into the tools that can help you make smarter trading decisions. In today's video, we are going to be talking about the MACD swing trading strategy, which is a powerful approach that combines momentum and trend analysis to help you identify high probability trade setups. So whether you're struggling to time your entries and exits or looking for a reliable method to capture medium-term price movements, this strategy could be the solution you need. Stay with me until the end of this video as I'll guide you step by step on how to use the MACD effectively and share actionable tips to maximize your trading success. So without wasting any much of your time, let's get started. First of all, we are on the 4 hour talking about swing trading. So we're on the 4 hour time frame on Euro USD, and I will briefly explain the MACD indicator before we dive deep into the strategy. So the MACD is a widely used technical indicator that combines trend it combines trend following and momentum analysis. It helps traders identify the direction of a trend, measure its strength, and pinpoint potential reversal points. It was developed by Gerald Appel in 1970s, and the MACD is calculated using two exponential moving averages. We have the shorter term EMA, typically 12 periods, and the longer term EMA, usually 26 periods. The difference between these two EMAs form the MACD line, which is the blue line on the MACD indicator, and this serves as the foundation of the indicator. So the signal line, which is the orange line, is a 9-period EMA of the MACD line, and it smooths out fluctuations and provides clearer buy or sell signals when crossover occurs between the signal line and the MACD line. You can see such crossovers happening around here. And then we have the histogram, which is the green and red bars. And this is a graphical representation of distance between the MACD line and the signal line. Positive histogram bars indicate bullish momentum, while negative bars suggest bearish momentum. So how does the MACD work? Well, we can use it for convergence. When the moving averages come close together, it signals weakening momentum. And when we have the cross, we signal potential reversal. I have the cross right like this here. You have the cross between the moving averages, it could signal potential reversal for buy or sell trades. And we also have divergence. When they move apart, it indicates strengthening momentum in either direction. These are cases where they move apart. Here we had the two moving averages moving apart, and we call it divergence. And this indicates stronger momentum in the market, just like we can see here, stronger momentum at the time we had the divergence there. So that's how the MACD works. It oscillates around the zero line rather than having fixed limits. Now let's talk about our strategy. Now we're talking about the MACD swing trading strategy. So the very first step is to set up your chart with your MACD indicator and identify the prevalent trend. Are we bullish or are we bearish? Or are we in a ranging market? So the best way to do this is to check if the MACD line is above zero. If the MACD line is above zero, it means that the market is in an uptrend and you should focus on long trades. If the MACD line is below zero, it means that we are in a downtrend and you should just focus on short trades. We have examples here where the MACD line and the signal line, both of them going above zero. So it means we should only focus on long trades, opportunity to buy this market. See movements to the upside after we had that cross to the upside to the above zero. So it's very important. That is the first step, identifying the trend using the MACD zero line. Now the next step is to wait for a signal line crossover if it hasn't already happened. So once the trend is identified, wait for crossover between the MACD line and the signal line. For a buy setup, wait for the MACD line to cross above the signal line while staying above zero. Two criteria is there. It should cross and it should stay above zero. For a sell setup, wait for the MACD lines to cross below the signal line while staying below zero. Look for a sell setup example. So we had our, you can see this sell setup example here. Now this is perfect. We have price going below zero here, indicating a bearish signal, bearish reversal incoming, and we at the same time we have this reaction in price. So we're looking for ways to sell this market. It means that we are now bearish and we should be looking for selling opportunities. But shouldn't sell immediately. The third, there's another confirmation. The third step is to confirm momentum with the histogram. Now, the histogram provides additional confirmation of momentum strength. Look for increasing bars in the direction of your trade. For example, here we had a bearish example. You can see increasing bars to the downside. And this is for a sell trade, so ensure that the histogram bars are growing negatively after the crossover. And for bullish trades, ensure they are growing positively after the bullish crossover. So for bullish example, I have this one. You can see the increasing histogram bars here. So that is the third confirmation. And after all of these confirmations, the next step is to enter your trades. But I would like to for you to have one last confirmation. All of these are just to avoid entering with false signals. Sometimes price can give us false signals, so it's important that we enter with extra price action confirmation. Talking about price action, we're talking about candlestick patterns, we're talking about break of market structure to the upside or to the downside. For example, we have a break of market structure right here to the upside after we had this crossover and the push above zero. We also have this cross to the upside. So this means that we are free to buy. We are free to buy. If we are bearish, then we shouldn't expect price to break structure to the upside. But breaking to the upside means that we are reversing from bearish to bullish. Helps us confirm our bullish trade. And here you can just place your entry with your stop loss below that low, and your take profits all the way up 1:2 is okay. And you can also target 1:3. You can also try your stop loss or watch out for opposite crossovers to take profits at the set time. So let me look for another example. Let me look for another wonderful example which we can use. Remember, false signals always happen, which is why I would advise you follow all our steps. For example, let's talk about false signals. We have a crossover happening here, but price is not above zero, so we can't necessarily buy. And you can see if we had bought after this market structure shift, we would have had a loss. We would have taken a loss here. You see this? That take profits at 1:2 would have taken a loss. Why? Because we are not above zero. So ensure that you meet all criteria before taking any trades. But on the other hand, if we meet all criteria, if all criteria are met, then we are free to take trades. For example, we have this bearish trade here, where the MACD had the crossover, we had the histogram bars, and we are below zero, signaling we are due for bearish reversal. There is bearish signals and confirmations, all of them pointing bearish. We also have a market structure shift to the downside, so we just look to take a bearish trade from there. Stop loss below, stop loss above the high, and take profits all the way down 1:2, 1:3. Perfect. And this is a wonderful trade setup. This is how we trade in the market. Now we have further examples, but it's always important you wait for price to give us all our confirmations before taking any trade. Before you take any trades, wait for all confirmations and for price to align before you short or before you buy. I'm looking for another wonderful example, and I think I have one here. We crossed below zero here, and we had a crossover also. We also have the histogram bars increasing to the negative side. At the same time, we are seeing break of market structure, several break of market structures to the downside, signaling shorting opportunities. Just enter at sell after that break of market structure, take profits all the way down 1:2. Remember, talking about swing trading, so we could hold this trade for weeks and days while stacking it all up. Also, when we get to 1:1, we could just put our break even on so that we won't miss a trade. Here you can see we had this false signal where we had the cross, but we don't have price being below zero yet. So traders who just jumped in here at where they saw the cross, just jumped in here, would have taken a loss immediately. So it's important that you wait for price to give us all the confirmations. We have another example here. We have the cross here. We also have histogram bars. We also have the MACD line above the zero line. Everything aligning, At the same time, we also have the breakout structure to the upside here. Perfect. So just place our buy trades at that breakout structure and stop losses below. Take profits all the way up 1 to 2 is okay, or we could just target this previous resistance zone or level for a quick 1 is to 1.5. We are talking about swing trading, remember? So we just target a 1 is to 2 in and out, and we're done. This lasted for about 2 weeks, the beginning of August up until the 15th. And that's swing trading for you using the MACD swing trading strategy. Alright, traders, we've come to the end of this video. Engage with us in the comments below. We want to hear about your experiences. If you found this video helpful, don't forget to like, subscribe, and turn on the notification bell so you never miss out on more trading tips and strategies. Thanks for watching, and I'll see you in the next video.